Don't use cash basis reports to manage your company or to make important business decisions. I'm James Leichter, president of Aptora, and I'm going to tell you why. You might file your income taxes using what accountants call cash basis. That's fine. The way you file your taxes is not and should not be the same as the way you print your company's financial reports. Reports like an income statement or a balance sheet should never be printed cash basis unless you're handing them to an accountant who's going to prepare your tax forms. And even then, an accountant can easily convert accrual reports to cash reports in just a few moments. So what's the problem with cash basis reporting? Under cash basis, you only recognize revenue when you deposit the money and the money clears your bank account. Otherwise, there's no revenue, no sales. You only recognize an expense when the money is taken out of your bank account, not when you bought it, not when you entered the bill. That's cash basis. That makes no sense for management purposes. Let's say you're doing just one job, it lasts 1 month, and you're getting paid $1 million. For 29 days, your company has zero revenue, no sales. You have payroll, you're paying your people, you better be paying your taxes, you're probably paying bills, but you have no revenue. Why? Because you're cash basis. Under cash basis, you only recognize the $1 million in revenue not only when they pay you, but when the money hits your bank. So one day, you've done $1 million in revenue, $1 million in sales in one day, but didn't do anything for 29 days leading up to it. That's cash basis. And it can work on the accounts payable side of things too. You could have absolutely no expenses and be hit all of a sudden in one day with a lot of expenses. Your revenue needs to match your expenses. Those two have to be timed together to have accurate reports. It's really important that your revenue be timed with your expenses. You need to have revenue coming in as it's happening, not when the money hits your bank, and the same with expenses. You simply can't make business decisions when your accounting system only recognizes revenue when the money hits the bank and only recognizes expenses when the money leaves the bank. That's cash basis. Imagine in your software program, you only create a sale when you get paid, and you never enter bills. Instead, you write a check when you have to pay your vendor. That's cash basis. The reports that would generate are an absolute mess. Under the accrual system, you create an invoice for a sale you made today. And if they pay you tomorrow or in a month or never pay you, you still had that revenue. How do you know when you're going to get paid? You look at accounts receivable. How do you know when you're supposed to pay your bills? You look at accounts payable. Under the accrual system, you're creating invoices when you complete the work or a phase of work or a certain percentage of work. You enter bills as you take ownership of items or buy items for a job. It doesn't matter when you pay it, and it doesn't matter when you receive the money. That's handled separately. You might think cash basis gives you a better picture on your cash position. With accrual software, the accrual system, you should know exactly how much money you have in the bank at any given moment, but you also know how much money you can expect coming in and how much money you can expect is going out and when. If you look at your statement of cash flows, you will be able to see all of that information and more. I've had people ask me, if my tax return says that I made $100,000, how come I only have $50,000 in the bank? That's cash flow. Your statement of cash flows will explain exactly how you made $100,000 in net profit before taxes and only have $50,000 in the bank. But that's not possible using the cash basis. Only accrual basis gets you that information. Okay, so let's wrap up cash basis versus accrual basis. Never run your business with a cash basis report. If you need to give your accounting people cash basis reports for tax return preparation, that's just fine. But they have no purpose in your business as far as you are concerned. Always go with accrual basis accounting reports. I'm James Leichter. I hope you liked this video. If you did, give it a thumbs up, consider subscribing, and I'll see you in the next one. Thank you.